Assalamu alaikum guys, in this video I'll be solving the question from past papers, which is Bella's beauty salon. In this question we are given a trial balance, an adjusted trial balance, and afterwards we have to make some journal entries, and then we will be making an adjusted trial balance. The first journal entry is about expired insurance. I will read out the adjustment which is in the question, which is an insurance policy examination showed $1,240 of expired insurance. Now, what does this mean? It means that we had prepaid the insurance expense, and it was an asset. But 1240 of that was related to this period. Hence, that prepaid insurance or asset has expired in this year, which means that 1240 of prepaid insurance has now become an expense for this year, and we have to record it. And of course, when we record an expense, we debit it. So here we can see that the journal entry is debit insurance expense, which is 1240. And of course, prepaid insurance was an asset, and the entry of an asset is debit in nature, but our asset has decreased, which is prepaid insurance has decreased. So we have credited it by 1240. So this is the journal entry. Now in the trial balance, as you can see, the number one column here you can see number one, and below also you can see. So in the prepaid insurance, the previous balance was here. It was, you can see the mouse cursor, previous balance was 1480, and now this asset, prepaid insurance asset, has decreased by 1240. So we will deduct this 1240 from the previous balance, which was 1840, and now the revised balance of prepaid insurance is 240. And of course the corresponding entry is here, down here, you can see, which is insurance expense debit by 1240. So this was the journal entry in the trial. This was the effect in the trial balance. Now second journal entry is about unused shop supplies. So the adjustment which was given was an inventory count showed $210 of unused shop supplies still available. Now this is a bit tricky, so stay with me here. Now shop supplies, as we can see here earlier in the trial balance, that C number 2 here, shop supplies, which was the original balance was 990. Okay, here you can see shop supplies, and it was of course an asset for us. These were essentially the things which we use. Inventory is an asset for us. But it shows the question, the requirement tells us that only 210 of it is remaining, which means that out of 990, 780 has been consumed in this tax year, in this financial year. So we will debit the shop supplies expense with 780, not 210, because 210 is the remaining amount out of 990. So 990 minus 210 is 780. And of course, our shop supplies expense will be credited by 780 also. So we will debit the shop supplies expense and credit our asset, which was shop supplies or inventory, as you can call it, by 780. So this is the trial balance impact. Here you can see at number 2 that shop supplies has now, as we credited them with 780, now they have only reduced to 210. And correspondingly here you can see shop supplies expense has been debited with 780 also. Okay, moving forward, the third adjustment was about depreciation of shop equipment. Now this is very straightforward. It tells us depreciation expense on shop equipment is $350. Of course, we will debit the depreciation expense in shop equipment account, which is 350, and we will credit the accumulated depreciation account, that is shop equipment, with 350. Now remember, we won't be crediting the asset account, shop equipment account. No, assets are placed at their original value, and accumulated depreciation account is created so that all the depreciation of the previous years is recorded in that. And when we prepare the balance sheet, of course, we deduct accumulated depreciation from the cost of the asset. So this will be the journal entry. The impact on the trial balance will be here. You can see number 3, accumulated balance here. Accumulated balance on accumulated depreciation on shop equipment. Previously it was for previous years, it had accumulated to 770, and now we will add 350 for this year. So now the accumulated depreciation which has credit balance has become 1120, and its corresponding journal entry number 3 is here. You can see depreciation expense of shop equipment is debited by 350. Moving on, fourth entry was depreciation expense on building, which is of course straightforward. We debit the depreciation on building by 2220. This is an expense, and we credit the accumulated depreciation account on building, which is 2220. The same impact, as you can see, accumulated depreciation on previously on the building was 3,840, and this year we have added 2,220. So the revised balance of accumulated depreciation is credit of 6,060. And of course, the corresponding fourth entry is about depreciation expense on building, which is 2,220. Moving on, rent accrued not recorded. So I will read this adjustment information as it is. A beautician is behind on space rental payments, and this $200 of accrued revenues was unrecorded at the time the trial balance was prepared. Now this what is this? Actually, we had earned a revenue of $200, and you know that expenses are debit in nature and revenues are credit in nature. So you can see here, let me just point this with uh, wait a minute. Yeah, spotlight. So as you can see here, that we have credited the rent earned account by 200 because it's income earned, but it was not recorded also. So it was not paid. A beautician is behind on space rental payments. It was related to this year, so we recorded it in the revenue, but he hadn't paid. The beautician did not pay us the rent, so it's an asset for us, and we record it as rent receivable because he will pay us in the future, so it's an asset. Okay, moving on. This effect of this on trial balance was as you can see, number 5, adjustment number 5 here. We debit the we debit just a minute. Yes, here we debit the rent receivable account by 200, and the corresponding at number 5th is rent earned account, and it had 2400, and now we have added 200 to it. Okay, 800 is about another entry which we'll be discussing shortly. Okay, moving on. Unearned rent. This is another journal entry, and the information was $800 of the unearned rent account balance was earned by year end. Now, unearned rent account, we had this. The tenants had prepaid us rent. Okay, the tenant has paid us rent, but it was not actually related to this year. It was related to future years. So unearned rent is essentially a liability account because we have received something, we have received the rent, but it relates to future periods. So the nature of liability account is credit in nature, but since that liability account, out of that liability account 800 has now been earned, so we debit the liability account, that is unearned rent. Sorry, this is rent. So unearned rent account by 800, and the corresponding credit entry will be the income account will be credited, which is rent earned account by 800. And we can see in the trial balance, as you can see, the rent earned account has been credited by 800 further. So this becomes 3400, and the corresponding number 6 entry is, as you can see, it's here. Yeah, unearned rent account. Previously it was 1600. As you can see, it had a credit balance. Okay, because it's a liability essentially. We received it, but this belonged to future periods, and out of that 1600, 800 was related to this period. So we deduct it from the liability account, and the remaining balance is 800. Okay, wages payable. The adjustment read as the one employee, a receptionist, works a 5-day work week at $50 per day. The employee was paid last week but has worked 4 days this week for which she has not been paid. So per day we pay her 50, and she has worked 4 days, which means 4 multiplied by 50 is equal to 200, but we haven't paid that. So we will recognize the wages expense account by 200, and we will credit the wages payable account by 200. It's a liability because we haven't paid it. Okay. So how will this affect the trial balance? As you can see, number 7, it's wages expense, which was in the original trial balance given as 3200. We will add 200 to it, and it becomes 3400. And the corresponding entry number 7 is wages payable account. Here you can see, which is now a liability of 200. Moving on, property tax payable. Now, 3 months property taxes totaling $450 have accrued, which means they have become due. This additional amount of property taxes expense has not been recorded. So of course they have accrued and we haven't paid it. So it has become a liability, and we credit the property tax expense payable by 450. And of course we will debit the property tax expense account by 450. So we have an expense and we have a corresponding liability, and this affects the trial balance. As you can see at number 8, which is property tax expense. In the original trial balance, it was 600, but 450 was not recorded. So now our expense is 1050, and the corresponding eighth entry is here, which is property taxes payable, which is 450 credit because this is a liability. Interest payable. 1 month's interest on the note payable, that is $600, has accrued but is unrecorded. Okay. So remember, the notes payable in the trial balance, they were credit in nature, which means that we had borrowed money, and now on those notes, which is essentially a loan, $600 interest is payable. Now we have to pay the creditors 600. Okay. So but we haven't recorded it. So of course we will record the interest expense as debit 600, and interest payable, because we haven't paid it, as credit 600. So this will affect the trial balance. As you can see at number 9, interest expense. Previously in the original trial balance it was 4350. So we'll add 600 to it and it becomes 4950. And the corresponding number 9 is interest payable, which is a liability, which is 600. So we recorded the liability also. So that's it for this question. Of course, if you want me to solve more questions, just comment them, and I'll be solving them as soon as I get time. Thank you so much for being patient, and see you in the next video.